Good morning, everyone. Now, normally at this point in time, and I know no one's watching just yet, but as people come in, normally at this point in time, I like to play the theme song. And it's a theme song that just says, it's the Atomcash angle, blah, 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 all that jazz. So today, we're going to do something a little bit different. Now, as you see, the title of the show is The Market is in a Wet Banana, or we're going to have a wet banana stock market. We're going to talk about that today on the show. But in lieu of today's theme song, I have a song that's a little bit more in tune with what we're going to talk about today. So hang tight. We're about to get into the show. Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. You're watching the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I am to turn complexity into clarity with a shot of adrenaline. Now, today, as you see by the title of the show, a very interesting show. We're going to talk about how the stock market today, I'm convinced, is a wet banana stock market. Now, that means nothing to you, but it means something to me, and I'm going to tell you exactly what that means here in a little bit. We'll wait for some people to come in. I know people are just pouring in, starting your day. So we're going to talk about this, so make sure you stay tuned for that. If you enjoyed that little intro song, or maybe you missed it, whatever, drop some bananas in the chat. That is a new song. That is by a real band, but that is not a song I made. But it is a solid song. So go check out, the band's name is Sack. Go check out Sack. Great name. Anyway, yesterday, wow. What a crazy, crazy day we saw in the stock market yesterday. And by crazy, I mean, well, we just went up and to the right. That was essentially all we saw. Broke through both LOIs, retested. We didn't even retest this first one at 663.05, but retested that and then went for another leg here, which reminds me, let me put in a line there for yesterday's all-time high, 66729, 66729. Boom. Closed essentially at a new all-time high. Got a little bit of red at the end of the day, but nothing too crazy there. And kind of just floating around this area for right now. Currently at 66666 in the pre-market. Very interesting to see that. And it would be interesting to see if we stopped around 666 on the market, which can't imagine would be a great omen. But yeah, so yesterday I was wrong on IWM, and I've been wrong both ways on IWM. I'll be fully transparent with you guys. I actually bet, or I was long Yeah, I was long IWM on Friday and I was short IWM yesterday, and I was wrong both days. And something I know about myself, because as you guys know, if you watch the program, I'm pretty accurate when it comes to looking at the indexes. And when I'm wrong more than once on the index in a short span of time, that tells me a few things, and I want to talk more about the wet banana thing here in a little bit, but that's what it's telling me, that the market is actually in a slip and slide, as I like to say, or a wet banana, that we're going to talk about here in a little bit, and I'm going to explain what that means. I'm going to explain how you can stay safe or actually be positioned more advantageously in this environment, better than the market actually is. And if you're part of our community exclusive trading, I actually talked about this morning in our morning thoughts, on how I'm going to look to trade going forward, at least in the next 2 to 4 weeks, and what I will be avoiding in order to protect myself from any potential, I don't want to say downside, but I mean downside in terms of positioning, so in terms of trading. So we're going to talk about that in a little bit. Make sure you stick around. We'll probably do that just after market open, like at 9:40. Let some people flood on in here. But across the board yesterday, we did see some clean divergence, which is what we were talking about live yesterday on the stream with IWM versus the Qs yesterday. But as the day went on, everyone got on the same track, went up and to the right. Currently, IWM is right around that previous all-time high at 242.35. We're just above that right now. And again, this depends if you're using, if you're including your dividends in your charting or not. And we're right at the top here, right around this 244.98 area pre-market high. So you're going to want to watch that. Essentially, if you want to keep it simple, watch 245 today on IWM for a continuation. Now, what I want to talk about on the IWM specifically, right now there is a very, 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 very high amount of short interest on our small and mid-cap names right now, which some people froth at the mouth and they're like, oh, if things are heavily shorted, that means I can make a lot of money, because they think the opposite and they want a short squeeze, which they're not necessarily wrong. There are opportunities where a short squeeze has a lot of validity. With that being said, just because something is highly shorted doesn't mean that there is opportunity there on the long end of things. Sometimes things are heavily shorted because it deserves to be heavily shorted. On the other side of things, sometimes things are heavily shorted and then the trend starts to reverse, and that's when you want to hop on those kinds of trends. When you see something is heavily shorted, you notice it's heavily shorted and things are technically rounding out and starting to go to the upside. I do want to touch on Grab real quick, which wasn't necessarily heavily shorted, but had some short interest. We just tapped my third price target of 661. I actually just looked back because I was curious when I first spoke about this. And when I first spoke about it on the program, it was somewhere around $5. So right now we're up about $1.50 from my entry on Grab, at least on the program. My personal entry, I think I was right around there actually. My personal entry is at 5. I have some shares at 5, some shares at 5.10, some shares at 4.80. So like a $5 average. I've got 3 lots of shares plus leaps. And we're actually really starting to break out here. More volume continues to pour in. Like I said, I'd prefer if this consolidated here just a little longer, but volume is so high in this range that if it breaks through the 661 area, which we tapped in pre-market, then it might just squeeze very quickly to 764. But I would prefer, again, if we kind of just chilled out around this lower 6 area first before going. It lets the move cool off a bit. It lets some stupid people try to short it, which gives us more fuel to the upside, which as a long I like. So that's what I want to see. But there's nothing short of this being a fantastic technical breakout on the daily, on the weekly, and on the monthly as a whole. Insane monthly candle here as well. Toby dropping some bananas in the chat. Hatchet saying, damn, that song gets stuck in my head. Good morning. And yes, that is a new song, and it is pretty catchy. If you like rippers like that, like I said, check out Sack. They only got one album out. They got an EP and another thing, but the most recent album is pretty solid. And good morning, Negum. Hope you guys are all doing well. Feel free to drop some good mornings in the chat. Let's see here. Whoops, forgot to go live on Instagram. There we go. But yeah, outside of that, we're going to talk about what we're going to do going forward here. What I'm going to do going forward here as we head into the market. Now, I do want to highlight and see. I don't remember there being. I remember Powell being today, if memory serving me right, but I'm going to double check real quick. Got a Fed speaker right now. You've got Trump to speak at the UNGA. I don't know what the hell the UNGA is. You got Bostic speaking at 10, so another Fed speaker. You got Trump with a bilateral meeting at 11. Then you got Powell speaking at noon 30, and then Trump again at 1, and then Trump again at 2:30. Okay, so Trump all day, essentially. You got Trump at 9:15, Trump at 11:10, Trump at 1, and Trump at 2:30. That's exhausting. You also, in the middle of that, have Powell speaking at 12:35. So it's looking like it's going to be an exhausting day from a point of view of catalysts. Let me see if anything got added for the rest of the week, because if I remember correctly, today was the bigger day, and then the rest of the week was pretty chill. I know we have jobless claims on Thursday, but that might have been it. Existing home sales, Costco earnings, we talked about that yesterday. And then we got some PCE and Michigan sentiment on Friday. So yeah, today's probably going to be the heaviest news day, which is interesting after yesterday's push, when you have Trump and Powell and other Fed speakers all in front of microphones today. So I think the market's going to be very sensitive to what is said today. So you might want to take that into account with your risk allocation as you're looking at what to potentially trade today or not trade today. You may want to at least put that in the back of your head, because all day, essentially, people are talking. So at least keep that in the back of your head as you approach the market. Eddie dropping the "you're" in the chat. You're Eddie. Thanks for popping by. We got about 4 minutes till market opens. Nothing too crazy, honestly. We're just kind of consolidating at yesterday's high across all three indexes. Volatility is pretty flat, not a big move there. Full transparency, I did open an NVIDIA short yesterday around the close. It was like an hour before close, mainly due to, and you guys know this because I told you to put it on your chart, we were around this 183.30 area, key resistance level on NVIDIA. Now we're gapping down, not very much, but about $1.50. This was also after that $100 million or $100 billion investment in Oracle or whatever, OpenAI. So it got a little bit of pop there. And then for the rest of the day, just kind of consolidated around that resistance level. As you can see, we went through it a bit. Here, let me fix that. Went through it a bit, and then we just kind of farted around it a bit. So right now I'm short NVIDIA via puts. And I'll probably close them at open unless we just rip through the 200 MA here, and then I'll just realize some. But I'm not looking to overstay, and let me make this abundantly clear, and we're going to talk about this in a little bit. You don't want to overstay your welcome on any shorts unless, again, the risk reward is very high. As I spoke about yesterday, I have some spreads open right now that are bear spreads, and the risk to reward on those is like a 5-to-1 or a 6-to-1. So it is working literally as a hedge, where I'm not risking a lot of money up front. I'm risking, let's just say for every $100, I'm looking to make $400, right? So yes, I may lose that $100, but if the trade goes my way, if things do take a downturn, I will make $400, which will pad the losses from other things that would see downside, right? So that's kind of the logic behind a trade like that. But if you do take a short trade on an individual name or anything like that, you're not really going to want to overstay your welcome. In fact, let me do this real quick. Let me pin these just for me to see, because I'll probably close these, or at least trim some right at open. So I'm short the 182.5s for this week, which right now I'm opening in the money, or will open in the money, so we'll see. I'll keep a tight eye on that. We'll also keep a tight eye on grab, and I do want to highlight open. We're going to talk about this one in a little bit as well. I might open along on open. It would be risky. It may not be today, maybe later this week. But this is essentially what I was calling for when we made the first open video. We're going to get into the technicals and why in a little bit. But I told you guys it was going to come back to this 814 area. It had to, essentially. It was too hot. Unless it just melted, and it did not. Basically double topped, and now 3 days later, back at this 814, which I said to you guys on the program originally, if you wanted to consider a long on open, this is where you'd start thinking about it. So now I'm starting to think about it. Oh, last thing before the market opens, because we got 1 minute. Snapchat. Well, actually, I'm going to need more time to get into it, but I did open my long on Snapchat. We talked about that on the program yesterday. So I am long Snapchat now, I believe at 850-ish. So I am long on Snapchat around 850 with a 818 stop right now. So that's on equity. We talked about that on the show, so I wanted to bring it up. We'll look at the chart also in a little bit. I just want to stay here for the market open, which comes in 4 seconds. Guys, like the stream and share it out and all that crap like I asked you guys to do. All right, bye. All right, market's open. Let me trim some of my NVIDIA, sorry, misspoke. Okay, trim. So I'm going to be quiet just for a second, realizing some gains. And I'm going to keep a tight eye on that. So just quick little 21% gain on my NVIDIA overnight puts. Sorry, I was updating my log. Nice wick there. Basically, we should have wicked the... Yeah, so we hit the 200 MA. It could continue down, but I'm going to actually just close the rest in profit here because I'm not looking to stay short. It could, like I said, could continue to... Actually, you know what? Stop loss at break even. Because if this does break the 200, it should get a little bit more downside, but nothing too fanatical. Yesterday, I was targeting around a $4 exit. I got out of some here around that 370 area, so I'm pretty happy with that. That was essentially, I was looking for like 20 or 30% on those contracts, on those puts. So I followed my gut on that one, and my gut was right to wait. So I'm happy I followed my gut. Looking like the market's a little shifty here in the open. IWM just rocking and rolling. New all-time high on the IWM. Going. We'll see if that continues. We will see. I'm keeping a tight eye on NVIDIA specifically. As I told you guys before, if this resistance breaks, this is going to melt. This 183.30, this is the point where I want to flip long if we break over it. Yesterday we broke over, but it wasn't like a confirming break. We broke above, tapped it, and then got back under. So it's not the kind of long I want to take, right? I want to wait and see if we consolidate around it and then go whoop, back to the upside. So that's kind of what I'm looking out for here as a potential on NVIDIA today. Not saying it's going to happen, but it could happen, especially with how hot the market is. And my stop got triggered on NVIDIA. Good trade. Good trade. Get rid of that so you guys don't have to stare at that anymore. All right. So far in the open, not a lot of momentum here. Let's check out our IV on our 0 DTE contracts. Right now, much higher than yesterday. So we're up 30% comparatively from yesterday. Remember, yesterday was like 9. Someone asked a question in the chat. We're on 9. Now we're at almost 13, 12 and a half. We're still under our rolling 52-week IV, but IV is 30% higher than yesterday. So comparatively, by that notion, we should see wider price action. Although yesterday was pretty tight price action, it's kind of grinded to the upside. This could suggest a more volatile day in general, just because of that bump in IV. Now, on top of that, we know Powell's talking, we know Trump's talking today. So that bump in IV could just be the market, for lack of better words, anticipating what they may say. So if you're trading the indexes today, you actually could experience some IV crush theoretically if nothing of note happens, right? In general to affect the market. So you want to at least keep that in the back of your head. Looks like I might have got wicked out of my NVIDIA. Looks like it's breaking the 5-minute here on the downside. Toby saying, oh yeah, weekly cup and handle on IWM. Yeah, so far looking pretty okay. Pretty good. Weekly cup and handle? What are we looking at, Toby? That ain't no cup, my friend. That is a... That's just the letter V. If anything, what I'd look at here is the December 27th, 2024 start, shoulder, giant ass head, another shoulder here, and then break to the upside. That's what I would see. I see what you're saying here by this high, and this isn't really, I mean, you'd need a little bit more basing here, I would say, for a cup and handle traditionally, but I know what you're talking about here. Getting a sweep down and coming back up. And also you would need more of a handle. Zoom out, my friend. All right. Oh, you look at this. That's too much of a handle, though. Come on. Now we can't just draw shapes to draw shapes. If you're looking at this from 2021, big old cup here, right? That's a deep-ass handle. That's a hell of a handle. But okay. I'll call that a stretch. Cup, handle, okay. It's a stretch, but I'll allow it. It's a little bit of a stretch. I don't hate it. I'll allow it. Market at 667. Qs are actually a little shaky right now as IWM continues to push. Interesting. Mainly, I'm gonna guess this NVIDIA downside is more than likely spooking the market just a bit. I am a shape hater. correct. Toby, you are correct. I am a hater of shapes. Apple is just consistently squeezing. Again, I like the long opportunity on Apple if it fills this bear gap first this week. It may just not. But that, again, speaking from a risk to reward standpoint, I prefer that to happen before I take a long. This could just continue to push here, as I will go into what what banana market is here, probably in about 5 minutes. So make sure you stick around for that. I did ask you very briefly before the market opens, but I'll ask you a little bit more formally now. If you guys are enjoying the stream, if you could do me a quick favor, wherever you are on X, YouTube, Instagram, Kick, Twitch, whatever else I'm streaming on, do me a quick favor and interact with the stream. Drop a like, a comment, say hi in the chat, whatever you're doing. Any sort of interaction helps me very much in the algorithm. I appreciate your support. And don't forget, if you haven't already, pop over to the YouTube channel and hit subscribe. Once we hit 500 subscribers, this will be an everyday show. So if you enjoy the content and you want some more entertainment, market commentary, and maybe a trade or two, feel free to pop over to that YouTube channel, hit subscribe. I thank you for your support. All right. Looking back at the market, we're looking like we're consolidating right around the 667 level underneath yesterday's all-time high at the close. So nothing too much to report just yet. The Qs are seeing some bearishness while IWM is seeing some bullishness. So again, another period of divergence like we saw yesterday, except this time the shoe's on the other foot, where we're diverging into more small cap, and the large cap tech is, or mega cap really, is getting some more downside. It's looking like I should have held on to my NVIDIA puts, but hey. Like I said, it's not the time to overstay your welcome as in a bear position in general. Oh, there's open. We're going to talk about open, guys. Don't worry. If you're long on open, I have many things to say. We will talk about open today. Tesla right now moving to the downside as well. Amazon. So it's looking like all your Mag 7 names essentially are just dropping to the downside at this moment in time. Ooh, Amazon, this is not good. Now you're underneath the 50 MA. You're underneath all EMAs and MAs with the exception of the 200 MA here. Your bearish MACD flip on the daily here as well with bear momentum. If you're a bull, you need this POC to catch it here at 221. You're flipping bearish here as well on the weekly. I would exercise extreme caution if you're a bull in Amazon here. The weekly and the daily are looking a little shaky. The daily more so, and if the daily goes bearish, especially if it breaks that 221 area, this weekly is going to go bearish. You're going to get back to 200 more like before you know it, I think. As it is, that's steep. Don't look too great. Oh, Microsoft's around that 511 area we talked about yesterday, which is where I like it for a potential day trade. So I may consider that. I do want to give the market a few more minutes here to get into things. See if we get a little bit more price action, get a better idea of what's going on across the board. IWM is all your strength right now. It's small caps. SPY, it's shaky, guys. I'm not going to lie to you. It's not that it's bearish, it's just not... It looks worse than yesterday comparatively is what I'm trying to say. Yesterday wasn't bad either, obviously. And I'm personally, I've said this in our Discord jokingly, I hate trend days. Trend days suck. I am a trend day hater. And I am going to be a generational trend day hater. Mainly, I hate trend days because of the fact that I make most of my money reversal trading. So timing the tops, timing the bottoms. I have a very hard time when charts just go up and to the right. It is just, that happens, just so you know, understand from a statistical point of view, that only happens 7% of the time. So there's a very low probability of that occurring in general. So when that does occur, it is very, it's very rare in general. I'm going to grab some Microsoft calls here. Might just dip my toes in here. I'm looking at the 515s. Let me add this to my watch list. There we go. As long as it's holding this like 312-ish area, I don't hate it. I'm just going to watch this for a second here. If it can kind of just consolidate here, it should move back to the upside. I'm going to dip my toes in here. Nothing crazy. All right, I added a few at 325, and I added a few more at 330. I'll tell you guys my average here in a sec. And add. I'll wait a second, and I'll do one more add, assuming these lows don't break. The lows could break. Tech is a little weak right now, so I want to be a little bit more careful. But I don't really think, mainly on the daily chart and everything, that Microsoft should see more downside. It really should stay around this level today and basically reverse back to the upside. That's kind of what I'm looking for here. All right, I'm adding a few more here. 294 filled. All right. I am now going to alert it long with an average of 312. So I'm long the 515 Microsoft calls for this week at a 312 average. And these move very quickly also, so you got to keep that in mind. Specifically with Microsoft. They're very gappy. You've got a ton of support here on the daily. You're on the POC, the 50 EMA, the 8 EMA, the 13 EMA, the 21 EMA. They're all clustered right here. So even if we're seeing a little bit of weakness in the open, just speaking from the daily chart alone, once it gets over this, like, right around this area, like this 512.50, 512.65, 512.77 area, basically right here. I'll put a red line on the chart so you guys can see. We'll call it right here. That's going to be like our trigger point, roughly. 512.76, pretty good number. That's going to be our trigger to push this to the upside, essentially. So we'll see how that works out in a little bit. Let's check on the market right now. Wow, we almost tapped all-time highs, just about a penny, literally a penny off of all-time highs there, and back down. I'm going to guess NVIDIA's still kind of grinding to the downside here. Apple getting a little bit of bearishness. That's probably why you're seeing a little bit of effect here on the market, as Apple has shown a lot of strength recently. It's getting a little bearish here. Meta is pushing a little bearish. Google getting a little bearish. So it's looking like our tech names are seeing some weakness here. We already said Amazon was not looking too great. But if I'm patient here on Microsoft, pretty confident this is going to reverse the upside. It may not be in the next like 10 minutes, but after a period of time, they should get back up and push higher. So we're going to exercise some patience there. Very rangy so far, though, on the open here. We've been open now for 14 minutes here and didn't really go anywhere. New low of the day, 66657. High of the day, 66728. So we're in a like a 70-cent range. Very, very, very tight on the day overall. Not much to see there. Let me see if there's any names that I have. We're going to talk about Snapchat as well, because like we talked about yesterday on that long, where the opportunity was for Snapchat. So we're going to talk about that. Now it's currently red. So if you like the position, you could consider it now. But here, we'll do that right now, actually. Let's pull up Snapchat. So this one's getting a lot of excitement on social media, and that's why we talked about it yesterday. In full transparency, I am long around 850, so right now I'm a little red on this position. But we talked about yesterday when I was up here at like during the program, it was on like low 9s or high 8s, something like that. That would more than likely have to fill this gap before I'd even consider a long, and then consider a stop basically at the 50 MA or a few shekels below, which currently is around, hold on, let me tell you exactly, that 50 MA is 813. My stop personally is around 818. 818, 817, something like that. So I'm ideally hoping it doesn't get that low. I might actually readjust that to put it underneath the 50 MA. I just didn't really anticipate another day so far so quickly. But it really shouldn't get much lower than that if you want that sustained move. Now, the risk to reward here, again, when we were on the program, we talked about getting in right here with that tight stop, and we'll do another one real quick for you. Assuming you entered today, there, you stopped it at around 818, which is where I'm stopping it. And again, this is equity, so it's not options, obviously. And we'll call it this first price target. So we got a 4-to-1 risk to reward ratio on this one. Only risking about a 2% downside for a 10% upside. If you go to that second price target, that bumps it to about almost a 6-to-1. So really solid risk to reward on this kind of trade, even on this current entry here. Pretty solid setup, even if you're just playing again for the 200 MA tab. So I did want to give you guys a little bit of a refresher on that since we did talk about it on the program yesterday. I figured I'd highlight it here once again. If you do want to consider it, it is now cheaper than when I got in. So you do with that information what you will. Let's check back on Microsoft. Dropped a bit lower. Now we're actually on the POC, I believe. The POC is about $1 lower. So this could kind of flutter around a little bit before it gets, basically I'm looking for like kind of a V-shaped recovery here. Again, NVIDIA not really helping that sentiment. Neither really is Apple or really any of the mega cap names. Meta's moving down right now as well. And Google as well. Tesla getting a nice little reversal here. I'm going to keep an eye on open as well because today is the day I'm going to look to open a long and open potentially today or in the next week or so. Now you're seeing right now on the daily chart, we're getting this MACD cross, so we're going to talk about this one in a little bit. But first, I think we should talk about the wet banana stock market. So, as I alluded to earlier, this is a wet banana stock market. So what is a wet banana stock market actually? A wet banana stock market is where things are like a slip and slide, right? And it's fun, and it's great, and you're on a slip and slide. So think of when you were a kid and you had a long piece of rubber or whatever, and you put water on it, you slid down it, whatever, and everyone's having fun, everyone's having a good time until there's a nail sticking up and someone slides over that nail and dies. That was on 50 Ways to Die or whatever, 100 Ways to Die, 1,000 Ways to Die, whatever, that old Spike show, that was on there, and that is burnt into my memory. But you break your arm, whatever. That's the whole point of what I'm trying to say with the market being a wet banana market, is you can make a lot of money, have a lot of fun, and it's a lot of fun until the music stops, which is what we're getting into this period of euphoria here for a lot of the bulls. And this is not me being bearish by any means, but it's a means of adjusting my risk. I have been and continue to look for some level of a pullback, but the market isn't really providing it. We're just going to keep pushing higher. There's a lot of people who are over short right now that are getting squeezed, and they will continue to get squeezed. And there will be a point in time when the music stops. It's just not right now. So instead of doing that, you want to have fun on the slip and slide. You just don't want to be the one who breaks your arm or slides too far, right? So what do I mean by that? I mean personally, and I'm a great example of this, as I had not the greatest time trading the indexes lately, which is typically a good bread and butter of mine. I would heavily suggest you consider staying away from trading the indexes. Why? So the indexes obviously are the ones that are heavily affected by news or heavily affected by other events. If you look at the SPY, if NVIDIA moves up or moves down, that strongly influences the SPY's price, as with the Qs or any other thing, right? But if you're trading one individual name, typically, yes, the market can affect it, but it acts as more of like a headwind or a tailwind, where if the market is more bullish, it blows at the back to keep rising things up, or if it's more bearish, it blows in your face to hold you back down. It makes it harder for things to move theoretically, right? That's how I want you guys to kind of look at things and how you can be more successful in this environment, because trading the indexes, I think, are going to give you a lot of false readings, as I've personally experienced. I've had a few false readings on trying to trade this market, unfortunately. And where you would find the most success, I think, is actually charting those individual names, those individual stocks that you enjoy trading, that you see success in, or that you see potential in, that you see good technical breakouts in, good technical levels to play. That is where the opportunity is really going to be. A great one that we've been talking about on this program, and I'll just use as an example, has been Grab, that I've been long around like $5, and there's a video on my channel about it. This was a great technical setup. It looked great on the daily, the weekly, and the monthly. Once we got this break above the trigger level, which was 552, and has now continued to the upside ever since. These are the kind of names you want to look for in the market right now that are going to give you more of an edge than playing the actual market as a whole in general, because things are going to act more like a slip and slide, a wet banana, where people are going to have fun, people are going to be making money, but if you are the one who's on the wrong side of things, you're going to break your arm, you're going to break your leg, you're going to have a bad time. And it's bound to happen to a lot of people. So that's why I say you should really be focusing on individual names right now. I think that is where the success, or where you're going to find the success, and managing your risk accordingly, knowing that. So keep that in the back of your head as you trade. I think that is where you'll find a lot more success than challenges. Whereas trading the actual market in general could cause a little bit more of an oversight, what have you, than normal, because there are more market mechanics at play. There is more aggressive delta hedging. There is more aggressive reactions with the VIX, where you may get some false positive readings, IV and IV percentile and HV percentile, fly in the face of other things that typically coincide with either a bullish or bearish environment. So there are a lot of mixed readings when you're looking specifically at the indexes, specifically at the SPY or the Qs or IWM, as it pertains to the overall market. So in conclusion, I would heavily suggest you consider trading individual names in this environment, because not only do I think your gains are going to be much better, but I think your follow through, so your technical analysis, whatever you use to trade, whether it's flow or whatever, you'll find is more accurate than trading the actual indexes right now, because there's a lot of muddiness around. So there's a lot of things that are affecting things more than they should, either which way, bullish or bearish. Where there are those underlying performers that are performing fantastically, and you don't need to expose yourself to the entire market to take advantage of that. So that's my theory on the wet banana that we're experiencing in the market, that I anticipate we're going to continue experiencing from anywhere from the next 2 to 4 weeks. What makes this month specifically interesting, as we're in our second day of our OPEX here for for October's OPEX, is we had a fantastic daily candle yesterday on October, for the first day of October's OPEX. And so far today, not much has really happened. So we'll see how the day ends. But so far, we're leaning more bullish. And in general, that tends to lead towards more bullish positioning for the month of, or I should say for the OPEX month of October. Now, with that being said, you have to keep in the back of your head that the end of the month is the end of the quarter. It's the end of Q3, right? End of September. So there could be some window dressing happening as well, where this could give you a false positive. So there's a lot at play right now, and this is just one thing that I'm highlighting here for you guys. There's a lot at play right now that I'm looking at from in terms of volatility, from what I'm looking at in terms of the options chain, from what we're looking at in terms of how IV and IV percentile are moving accordingly with the underlying, specifically on the markets, that aren't aligning exactly, and it feels like almost there's something off a little bit. So that's why I'm saying you may find better opportunities trading those individual names versus the actual stock market, like SPY, Qs, or IWM, if that's something that you typically trade, as your technicals will more than likely be better. And the other thing I'll leave you with is, in general, unless you have a very high risk to reward return on bear positions right now, I would not consider bear positions. I think right now you're really betting against a steamroller the way things are moving up. There is the highest amount, and someone can fact check me on this, but I believe there's the highest amount of short interest on the Russell right now than ever in history, and the Russell right now is sitting at all-time highs. So that's not the environment you want to consider short. Obviously, people are still going to continue to short it. And yes, eventually they could be right. But if this does continue going, that just adds more and more and more and more fuel to squeeze to the upside even harder, even faster. And those are the kinds of things you want to be very cognizant of in this environment, where shorting would have to be very precise and very particular at key levels. And again, on those individual names, because I'm very strongly of the belief right now that if you are not careful, again, on the slip and slide, you're going to break your arm. You're going to have a bad time. So hopefully this helps you guys at least understand the kind of environment we're in, because it's not very common that we get into, again, this wet banana market where things are very give and take. I'm seeing a lot of people, and this is also, here's your last sign. This is what I'll leave you guys with. When there's a lot of people on social media like posting how, oh man, free money, we're doing so great. I bought these calls, the bull flow, whatever. When you see a lot of that rhetoric over and over and over, and I'm seeing a lot of it, that is my sign to be risk off. And it means in general that things are getting euphoric, where it doesn't mean I want to be a bear and just keep shorting every single day, because I'm going to get railed. That means I want to ride the wave, but cautiously. So earlier this week and this month, I was actually leaning more cautious bullish. Then I went to a neutral stance, and now I'm actually more bullish. So if on a scale from like out of 100%, I'm more of like a 70-30 bull, where things are leaning cleanly more bullish because that's just the way we're going to go right now. But personally, I'm reducing my size a bit in case, again, the music just stops one day and I'm caught with my pants down. I'm not going to lose everything, right? And that's what I would just suggest you consider with your trading going forward into October OPEX. That's my shtick on the wet banana, guys. What do you think? Agree, disagree? Let me know in the chat. Strange Maker says he was expecting more of a pullback yesterday and it blew off. Yeah, you saw me, man. I took a bear position on IWM and it blew up. It did not work out in my favor. And as you guys know, like I said, I'm going to pull up my stats again, because I tracked this ever since the end of the year last year. I was joking how I'm a pretty good bear when it comes to the indexes. It's like 92% or something. I am, 127 over 139. 91.36% of the time correct with my bear trades on the indexes. So it's very rare I get a bear trade wrong on the indexes. So for that to happen, that's another sign for me, like knowing my limitations. That's another sign for me to be like, all right, let me step back a little bit. And the other thing that I don't know if I talked about on the show, but I talked about it in our Discord yesterday, is I personally know a limitation of mine where I do really bad, and you guys may do excellent in this environment. This is somewhere I suck at personally, is up and to the right. Trend days to the upside, not my bread and butter. I know I do bad because I'm always looking for a reversal. I'm always looking to hit the bottom, reverse to the top, like I'm trying to do with Microsoft right now. If I'm shorting, I'm looking to time the top, come down to the bottom. I'm always looking for a reversal of pattern. That is just how I like to trade. I like to be the contrarian. I like to be there before everyone else is to take the other side of the trade, instead of just riding the wave to the upside. I find it very hard for me personally to do that. And if you guys have good luck with that, then, by all means do it. There's nothing wrong with it. It's just not my cup of tea. I have a very hard time trading, just getting on the bandwagon and rocking it. All right, so far, Microsoft trying to get a little bit of a reversal here. Not out of the gate here yet. Remember that trigger level 512.76. Currently, those contracts aren't too far off from my entry. Right now, trading around 292. Again, I have about it's 312 entry. So we're only just a little red, little baby red. Nothing too crazy just yet. The market's really doing nothing for me to talk about, which kind of sucks. We did technically make a new all-time high. We broke that by about 5 cents, but again, the range on the day here is less than $1. It is boring. Nvidia continuing to move down here. You might see a little bit of a reversal here on Nvidia if it can hold this 180 area. Again, obviously another spot of obvious psychological. It's a whole number. The market loves whole numbers. It's also Nvidia, right? So let's watch this a little closely here, because if we do build out some level of a base here, now we're breaking lows, so that's not what I want to see. But if we do see the bulls kind of float around this 180 area, I will consider calls to get back up to basically to 183.30 by the end of the day, which is like, if we break this, I'm telling you guys, Nvidia is going to 200 like very quickly. If it can break this with some fervor and some like force behind it, some volume. Yesterday you saw the break, but it was already, well, look at it. It was already extended, right? Because you were all the way down here at 175. It got that rocket fuel to pop it like $9, and you see it kind of fluttered, got the break, but it just wasn't enough because you already, you're burnt out. You used all your rocket fuel to get up here. It needed that kind of news here, and then it would have, talk about a blow off top. That would have been nutty. If it got up to this level and then you got the news, whoo, that would have been sweet. The other opportunity I see for Nvidia today is if it actually sells off a bit more to around like the POC area. So I would consider along around, what's that strike price? It's 177.5 to this 177. Is that 7? 176.70. It's about $1 range there. But that's be the second area that you're going to want to look for some level of confluence to the upside. So you got your 8 EMAs sitting at 177.54, and then your 13 EMAs sitting at 176.70, which is also exactly, like to the penny, it's the exact same number as your POC right now. So if we do see some downside on NVIDIA, I'm going to wait for that range, and that'll be a place where I'm actually going to consider longs on NVIDIA today as well. Again, me being the contrarian, tech is down right now. Russell is hot, and I want to long the thing that's going down because that's just how I am. And especially if yesterday was anything like, or if today was anything like yesterday, and everyone gets on the same page again, then the Qs would end up reversing to the upside as well, as we saw with IWM getting on the same page with the Qs and with SPY yesterday. Really, I don't think the Q should really be much lower than 601 today. It's possible they sell off lower, but they really shouldn't. Those Microsoft contracts are now green, trading at 316, and we're still below my trigger price here. Over this trigger price, it should push them like 340, 350-ish. And then at that point, let's get some hard numbers here. Delta right now is 41 cents. Solid delta. 41 cents. I'm going to look for right around here. 514.24. Which gives you about a buck and change. 60 cents. Let's assume 360. So I'm looking for my first trim around 390 to $4 on these contracts. And again, that's conservative math. I always do conservative math. I always just assume just the delta. When I'm calculating contract gains, I go just the delta. I don't include any gamma or vega. I just look at the delta because it gives me the most conservative gain I could possibly get on the contract, assuming there's no delta appreciation either, because obviously as you go in the money, that delta goes up. It gets higher, closer to 1. So I'm assuming that delta's not moving. I'm assuming I'm getting no gamma. I'm assuming I'm getting nothing from vega or any other effect. I'm assuming the delta stays constant, which is the most conservative way you can actually calculate options contracts. It's also very quick and dirty. Like, you can do it very quickly. EB saying, good morning. Funny hearing you say this in morning thoughts about not trading indexes for a while. I wrote that exactly in my journal. Hell yeah, man. And thanks for popping by, EB. Yeah, that's what it is right now. Not that it's bad. It's just because of the environment. You're going to have a better time trading individual names, essentially. You will make... I can almost promise you'll make more money trading those individual stocks that have solid setups versus the market. And I'm someone... People in our community will tell you, I'm someone who trades the SPY... probably like 30% of my trades on the week, or maybe 50%, I'm trading the SPY or some level of the indexes. And I'm telling you now, as someone who does that very frequently, I'm not going to. I will hunt for better opportunities in individual names. I mean, this price action on SPY today is sucking massive eggs. We are just hovering around the devil's number, or we can almost call it the double devil's number at 66666. 66666. 5 sixes. And actually, the 200 MA is right now at 66670. So, floating around the devil's number here. So we'll see what happens. But this is very, very tight price action today. If I'm a betting man, let's actually see on the IV if things changed yet. IV did decay just a little bit. It decayed about 0.5%. Not much, but if I'm a betting man, that IV is probably going to stay consistent or actually climb a little bit higher as the day goes on and as we more than likely keep a tight range until Powell and Trump multiple times. Trump's speaking right now. But again, you have Trump who's talking right now. Then you have Trump again at 11:10. Then you have Trump again at 1. And then you have Trump again at 2:30. And then Trump tonight, which if you trade overnight, just be aware of that. And then in the midst of all that, you've got Fed Bostic speaking at 10. And you've got Powell speaking at 12:35. Fun. Fun. Q's moving down a little bit. IWM getting a little bit of a retracement here, so that's going to cause that SPY, that nice little death candle you got there. Which, again, this looks like a massive drop, but in reality, it's really not. This candle alone is a 40-cent candle. It is not a big drop by any means. It is just because this price action is so tight right now that these, what are like normal price action movements that we see on SPY every single day, 20, 30, 40% in a 1 minute candle, are exaggerated and very, they seem big just because I'm looking at the 1 minute chart and we're going nowhere. The range is so tiny that these candles seem so much larger because we zoom out. Oh, that looks like crap. But if we go to yesterday, for a better example, like this candle right here that I'm just hovering on, which was like a substantial drop. That was like a 40, 50 cent drop. So half as big of a price action move. But look how like not as dramatic these candles look, and these are still on the 1 minute chart. So it can mess with your psyche just a little bit. Oh, Microsoft getting a bit of move. Those contracts are now at 342. A little bit of action. We'll pop back to that as soon as I can. Oh yeah, hit that button. Ta-da. All right, we're just about at the trigger point. We also have the 50 MA here, so expect a rejection here on first glance. But if we just power through it, we're going to get up to, again, my first price target right around here, 514.27-ish. And again, my first trim, as long as I'm north like 390, I'm pretty happy. 390 or $4. That's what I'm looking at. Negum says, I'm loving to trade spreads at the moment. So I'm trading spreads on individual names. Hell yeah, man. There's nothing wrong with it. Spreads are really solid. The one thing I'll say that can be a trap with spreads, just make sure that you're taking profit. And what I mean by that is if you're trading like a $1 spread, for example, right? And let's say you got in at 50-cent entry. Once that gets to, and let's assume it's a debit spread. Once it gets to 90 cents or even 80 cents, you might want to consider walking, because at that point, the maximum that you have left is only 20 more cents or 10 more cents. So there's not a lot of juice left in the tank where you're risking more downside, because unlike a call or a put that can go for infinity, theoretically you're limited your gain. So once you get to the end, once you get to that higher end of a call or of a spread, you may want to consider walking away, just because it's going to give you that gain that you're looking for, essentially, because you don't want to continue to hold on for a few more pennies, because if the movement does reverse or whatever happens that you're not anticipating, you're losing all those profits you made, and you have a very hard time with it. Because as that spread moves in your favor, you take on more risk, ironically, and risk in terms of the maximum gain you can make. You're taking on more risk because now you're risking your profits, versus a regular call, which you could hold for infinity. I could hold this Microsoft call if it went to $50. I could hold it forever, right? Well, until it expires. Unlike a spread, if I bought a 510 and a 515 spread, if Microsoft is near 515, I probably want to walk on it, because I can't make much more money on it. Yes, the time decay eventually will get me more money, but I probably won't make a lot. It's probably going to be near its max value, at which point you want to probably realize your gain. So that's the only thing I'll say in terms of spreads that you may want to take under advisement, that you're just cautiously careful that you're not throwing away gains with spreads. Obviously goes for everyone, not picking on you, Negum, but it's something that everyone should be aware of if you trade spreads. Jeez. Excuse me. So we're seeing Microsoft right now kind of getting a little tight here around the trigger. Like I said, this line here is about like the midpoint where I was saying it was going to be a trigger, because it was kind of like a little rangy. So I also said we should expect some level of rejection here. Watch for this 8 EMA back test and kind of build out sideways a little bit before getting a harder pop here to the upside. I think that would be the more likely scenario. Let this move cool just a little bit, build a higher low, break this finally on a hard break with some volume, and that should get me what I'm looking for here, at least in the near term. This 5 minute hasn't even reversed yet, and your 3 minutes just about trying to. You broke the 3 minute SAR here. From a 5 minute standpoint, so this is what I'm looking at here. The 1 minute needs to cool, and the 5 minute hasn't even gone bullish yet. It's actually still leaning more bearish. So assuming we can hold right around VWAP, essentially, which you guys know I don't love VWAP, but right around here, and kind of build out in this range, that's going to allow the 1 minute to cool off, and it allows more bullishness to come into the 5 minute, theoretically, which now the 1 minute, when it flips, will go bullish. The 5 minutes bullish, and that's your perfect scenario, at least for me, from what I'm longing, seeing the trend on the short term, so your 1 minute, this is for day trading, seeing the 1 minute short term trend flip my direction, and seeing the 5 minute longer term day trend, right, flip in my favor. So getting both flipping in my favor, plus breaking over my trigger, plus getting above the 50 MA, you have a lot of confluence for an upside move. No, Negum, there's no great advice here. I do not provide any sort of advice unless it's about how to not rent a car or any weird life story of mine that has to do with any of my previous jobs before I did this for a living. Otherwise, you will not find any advice here. There's no advice on this channel. I provide you no advice whatsoever, especially none of the financial kind. None of that is found here. No, sir. No, no, no. We have a good time here. We get a laugh. Back tested that VWAP and the 8 EMA here. Now getting a decent stick here Again, I want it to consolidate a bit more. I don't anticipate it breaking right yet. I'm not going to be mad if it does. But it's looking okay. I bet you there are a few people in the chat being a little nervous when I got in and it kept going down. But again, reversal trading is my bread and butter. This is how I make a living. This is how I do this. I do not like to buy the rip and continue ripping. I don't like buying the back tests. Like, people will do this, and this is IWM, and I'm not pooping on you if you do this. God bless. I don't like to watch this. Oh, back test the EMA. Cool, I'm going to buy long. And it works. Clearly, it would have worked today. I don't like doing that. If you do and you're a trend trader, God bless, make your money. Don't let me stop you. But this is how I like to trade. I like to buy when things are looking meh, and they're at a period of support, especially on like the daily, buying in and waiting for my reversal that I'm more than certain will come. A lot of the time. Pretty surefire. Q's trying to turn around here. Like I said a few minutes ago, I don't anticipate the Q's staying under 601 today. It should really kind of stay above that. I really shouldn't see it much lower than that. But we are starting to see what I talked about maybe like 10 or 15 minutes ago about everything getting on the same page once again, which is great, especially if you're a bull in this environment. You're going to want to watch like 60166, basically these two wicks up here, for confirmation on your Qs. But if we get above that, you're going to have all indexes going up and to the right. And maybe a repeat of yesterday, and maybe SPY goes to at least 670 today. If the Qs can break over these two wicks here, again, like 60166, you're probably going to hit 670 on the SPY. You're probably going to hit 250 on IWM today. We're probably just going to... Strange Maker says, information given that you choose what to do with. Correct. I am just speaking words that your ears are hearing, and then your ears are deciphering those words and doing whatever you want with them. That is what I do for a living. I say words, and then people listen to words, and then people do whatever they want with the words heard. We are now consolidating, or trying to consolidate above the trigger, which is always a bullish thing. When you break the trigger, even if you don't go right away, when you consolidate above it, that's a very, very bullish thing in my book. We're kind of hovering around it, so we're not seeing that fall through yet. These contracts are trading at around 350, so they are pretty solid right now. If you did want to take a little bit off, if you're someone who's a little scaredy cat or anything like that, you can. It's not bad. I mean, it's probably, do some math. You got like 13% here, so there's there's nothing bad with that. I typically trim around like 10 to 15%. I just want to see a little bit more follow through here. I want to capture some IV pop essentially. I want to get like a nice break of this and like a quick sharp move, especially on Microsoft contracts where they're more spready. I can capture a little bit more IV and push the ask up just a little bit where I can possibly get more money. That's what I'm looking for here. So it's not necessarily greed, but it's more about understanding how to trade Microsoft and understanding. Right now it only has a 10-cent spread, but sometimes this spread gets up to 20 or 30 cents on a big IV move, which people smack the ass to get in, and they're stupid. So I want to be the guy who's selling to those contracts to the guy who's stupid. So that's kind of my role. For every buyer, there's a seller. SPY is just sitting right in the middle here. Qs are trying to get out of Dodge. As you can see here with Microsoft as where it's sitting, and the Qs are trying to put in some level of reversal here. Let's compare it to our other Mag 7 names and see if any of the other Mag 7 names are, Apple's kind of building a base, are looking more bullish. Like I said, NVIDIA over 180 is going to be that reversal point. I don't know if I really want to take a stab at it because I'm already exposed Microsoft long. But if you like that idea, wait for like a little bit of backtest here. You might want to wait for the 50 MA to break, but holding 180 is going to be pretty bullish for NVIDIA, at least for a reversal trade, if that is your bread and butter like me. Come on, Microsoft. Give it to me. Look at this 5-minute MACD slowly trying to reverse. We still got this red SAR here. So if this is cooking up, if we get the Qs to push, this MACD reverses and we get over like a 54 on the RSI here soon on the 5-minute, and we break this red SAR, you're getting back to high a day. These essentially will go in the money. I'm very confident of that. But again, my first pit stop is around like $4. That's where I'd like to take some off the table here. But I'm pretty confident you're going to get, if this works, and if the Qs support the move, if the NASDAQ looks like it's reversing to the upside as a whole, right, we're going to need that wind against our back here to get a nice push, then you will get back to high a day on Microsoft. These will go in the money. You guys will also learn, if you watch the show, it's very rare that I speak in absolutes, but when I speak in absolutes, they tend to be accurate. That's why I said if the Qs can get over this area right here, 601.65-ish, right? Here, I'll put another red line here for you guys. Let me pop back to it so you can see. Boop. If we get over that red line, and assuming Microsoft is above the red line at the same time, and assuming NVIDIA is north of 180, Microsoft calls are going to go in the money. VIX is just kind of flowing to the upside, but nothing major. Yeah, the SPY is going to be a bore today. It's going to be a bore. Someone asked a good question a little while ago, and I do want to highlight it because I know some people think this. And especially if you're a newer trader, you might see this as an opportunity as you try to add more tools to your toolbox, where a lot of people I find a lot of people make mistakes is when they trade a iron condor, because they're trying to overcomplicate things and they go, oh, the market's going sideways, I want to trade the sideways price action. Yes, again, I will tell you, you can make money, but if you don't know what you're doing, trading a 4-leg option strategy is not where you should be starting, especially if you don't understand the Greeks. Not to mention your commission getting in and out, getting your proper fills in and out on getting profit is very hard if you don't know what you're doing. Especially if you're not waiting for it to expire, right? It's very, very hard. And when and if this goes out of the range, which it probably will, you will lose a lot of money because you'll have a hard time closing. You're probably going to have unfavorable fills, or it's going to force you to be like, oh, well, maybe it'll go back in the range. It's very, very, very bad, I think, for most people to trade sideways option strategies like condors. Now, what I will say is if you are that kind of person that wants to contemplate trading a condor or trading a butterfly spread, there are rare times where the risk reward is phenomenal. By all means, again, do whatever you want. I'm just offering you another way to think, as I like to do on the show, give you guys other ways to think about things. Is there never a time when you look at the chart and go, this is more than likely going up, or this is more than likely going down? I bet you there are more times where you say something is more than likely going to do something rather than it is only going to go sideways, right? So at that point, wouldn't it be more advantageous to get either a directional bull spread or a bear spread, whether it's a call debit spread, a call credit spread, a put debit spread, or a put credit spread, where you're only buying 2 legs, and you know, as long as it's above this level, I'm making money, essentially. And I'm going to stop making money when it hits this other level. It gives you more defined risk to reward, and even if it goes sideways, depending on what your strategy, like how you position it, even if it goes sideways, you could still make your money on the sideways price action. But if it goes in the way you think it could go, whether bullish or bearish, then you also make money. So I would heavily suggest you consider, if you're someone who just looks at trading going, man, I'd like to make this more complicated, and you want to trade more condors and butterflies and all this other extra stuff. Again, there's nothing wrong with it, especially if you're using it specifically for hedging, but most people watch this program probably shouldn't be hedging in general. There's nothing wrong with that. I'm not, spit and blame or anything, but most people probably shouldn't be hedging. And if you are, you're probably going to have an easier and more effective time trading just 2-leg spreads versus a 4-leg. So something to think about. You do what you want. Microsoft getting a little bit of retracement here. Let's see it backtest the 50 MA here from the top side. So again, I want to kind of sit in this range, right around like 512 to 512.78, float here for a bit before actually getting a move up. Now you're seeing the MACD kind of drop here on the 1 minute, which is fine, right? Maybe even hit the POC, kind of float around here, let it cool off, let it come down, and then move back to the upside. So we will wait on that and see what comes of that. Volatility is pretty stagnant today. Like I said, it did move up a little bit, but nothing too much. NVIDIA. Looking pretty good for a reversal here. It's looking pretty juicy. I think it needs to come down like Microsoft a little bit too. Back test that 180. If it back tests 180, I'll probably get it on calls. Probably. I'll keep an eye on this one. Apple's just building a little bit of base here. Meta reversing. Google reversing. Tesla actually seeing a little bit of bearishness. Didn't I say 221 on Amazon? I could have swore I said 221. Yeah, that's where the POC is. 225.55 POC. I mean, depending where you zoom out to, obviously. But right in that range, around 221.85 to 222 is where the most volume is traded. Essentially, since last 9 months. Sorry, 6 months. A lot of volume here. So you should find some level of bottom here on Amazon, at least intraday. Which you did, and you're trying to get a reversal here. So if this back test, you could consider a long with a tight stop for a double bottom trade. So that's another opportunity that we could see today on Amazon. Yeah, this is why I say don't even bother trading the indexes. Unless you traded IWM and you rode the wave, God bless. But other than that, not fun. No. This is these are the worst days. I hate when the market looks like this. This sucks. I do want to talk about open. So let's get into that. Actually, we're tapping. Ooh. We're on the gap fill right now. So the gap fill from this gap up is at 742. So we're literally on the gap fill as I'm talking about it right now. Now, if the bulls defend the gap, which they could, then it could reverse. However, you did break the SAR. You do also have the 21 EMA to catch it here. Fourth red day in a row thus far. Does it continue? I'll let you know my thoughts in just a minute. Just checking one other thing off screen to either confirm or deny my suspicions. Nice. I love when I don't have information. Ooh. How ridiculous is this IV? 190. IV is high. Could go at the money. This is me contemplating in real time. There's not a lot of meat on these. I'm looking at the 7.5 calls on open. These opened up at 91 cents. They're now trading 53. I'm going to grab some 7.5 calls on open. All right, I'm adding. I've got about a 54 average. Let me double check. Sorry, I'm managing like 3 accounts right now. I've got like a 53.5, so I'll just call it 54 so no one can cry and say I'm lying. What's that? 926s. 7.5. Call at 0.54. Okay, I'll talk about this in a sec. Come on, don't do that, man. I'm about to say some potentially nice things about you. Can we not? Come on, what are we doing here? I'm getting trolled right now. This is a troll, right? It's a troll, right? We're trolling. You're trolling me. Funny joke open. Just quick little turnaround here, please. Thank you. Hatchet dropping some financial advice in the chat. All right, we'll talk about opening just a second here. Alrighty. All right, so looking back at open, so I spoke about this one a little while ago when we had this gap up and it was very hot. People were rejoicing. It made like whatever it was, 50%, 80% in a day. It was a ridiculous move. And I said that you're probably going to want to wait and see for this 814 tap before considering a long. Now, full transparency, I just opened some short calls on open, even though the IV is a little inflated. But I'm basically looking at right now the gap from this candle at 742 as an area in which it should look to hold. On top of that, you also have the 21 EMA on the daily here to catch it around 722. With that being said, if it reverses over 750, I think getting back to that 814 level would be pretty quick, whether it's today or tomorrow, but fairly quickly. So I'd be very careful purchasing out the money options, but at the money or near the money, you're probably okay with a quick little options trade here near term. Now, with that being said, looking at this for an equity opportunity, actually. I said before when I made this first video on open that I wouldn't short this name by any means. I still would not short this name because I think there is a lot more left to go in the tank. You just need the right entry. And the right entry is, in my opinion, around here. I'm going to consider, and I'll probably do this live. I'm live right now. I'm going to consider entering some calls here. I'm sorry, some shares here because I'm already in some short-term calls. But getting in on some shares here with a second swath waiting at 616. So basically going half size here and deploying another half if 616 taps. Ultimately, over 814 or at 814 is where I want to start considering my first entry. So basically anything around this area is what I'm already okay with price-wise. The other thing you could do, which is something I'm personally more than likely going to do, is sell some puts. Since I'm looking to accumulate in this general area anyway, I can comfortably sell $7.50 puts here in general because, well, I'll probably make a good amount of money on them. And your break even is probably much lower than you think it would be. For example, if I sold a 7.5 put right now, 60 cents or whatever, so that puts it at what? If you click the 60 cents, you get assigned. It means your cost, let's say 60, it means your entry point really is like 6.9. So you have a much lower entry than higher, which is great if you're okay with selling $7.50 puts here and okay with the assignment, which I am because I'm looking to actually accumulate shares in this range. In fact, as I'm talking about it, I'll probably do that in a moment here. But I think open's a good buying opportunity right here for a short-term options trade or an equity position, either half size here and deploying another half at 616 with a tight stop underneath, or a short-term options trade here, looking at least for 814. If 814 breaks, you're going to have more legs here. Just watch your timing, and the IV on these are very expensive. Full transparency, I purchased some of the $7.5 calls that are expiring this week, and the IV on these contracts are at 190%. Your 52-week IV is sitting around 150, so I am paying a premium for that IV, so you got to keep that in the back of your head that I'm paying a premium, and you more than likely will too, on these contracts. So, and that's mainly due to the fact that we're down, at least currently, 11% on the day. So for me to make money and not lose on IV crush, I need a sharper reversal to the upside or a quicker move here. And the reason why I waited for today versus yesterday is now we have 4 red candles in a row. We're tapping, again, that point where this the low of that gap up candle, and also a point of resistance here on 9.8, where the 21 EMA is as well. So we have a lot of confluence on the daily chart that we could get a sharp reversal here very near term, where I could make some money on some short-term options, make some money on potentially selling some puts, and definitely consider purchasing some shares in this area. So that's a quick little update on open. Hopefully you guys found that helpful. Okay, I'm going to go buy shares on open right now. And I'm going to buy shares in our seed decree account as well. I'll do that first, actually. We'll take care of the people of the community first. And if you're watching, then, hey, guess what? You know what I'm doing. So God bless. Ooh, that is way too many shares. That was a typo. I'm actually going to buy, I'm not going to, I'm a little bit more aggressive with this one on my seed decree, or at least what I want to do. So I'm actually going to go my 5% allocation for seed decree. If you're watching right now, you're in seed decree. I bought 24 shares on the seed decree account. And if you don't know what that is, it's a small account challenge we're doing in our Discord. Buy. One second. Just typing. Gotta take care of the people. Okay. That's done. Now I also want to sell some puts. Oh, perfect. I've already filled. I placed the order while I was talking, and I didn't notice. So I'm filled on selling some 7.5 puts at 57. Where's my wheel? Wheel. Open. Or sell to open. 9/26. 7.5 puts at 0.57. Credit. Wheel. Nope. Sell to open. Not stop. Cool. Cool. So that's more than likely going to fart around here for a little bit. But watch it getting over 750. And then over basically your POC here, you're probably going to move up pretty quickly on the day. It wouldn't shock me if this got back to 814 today, to be honest with you. Have I looked at BETR? Hold on. Toby says, thank God there's no financial option for a report on YouTube. Ha. Action says, have you looked at BETR, the next Eric Jackson stock? No. I can take a look. Better Homes and Financing Holding Company. A company is an AI-powered mortgage lender. Is this like Better Mortgage? Oh, yeah. I use these guys to buy my first house. Okay. Well, bro, what the hell? Yeah, it's up. And it looks like it was reverse split, at least at some point. Considering I can almost bet the farm that this was never $3,000 a share. It's currently a $1 billion market cap company. Let's see. Reverse split 1 for 50. Yikes. Whoo. Whoo. Yikes. 1 for 50. And at that time, the shares were $20. So what's that? Oh, I got to do reverse math. I'm not good at that. So if it's 20 shares now and it went 1 for 50, so I need to reverse it to take a 1. What's 1/50th of 20? What's that in a decimal? I don't know how to do that. I can do, obviously, like 1/4 is 0.24, right? That's easy. What's 1/50th? 0.1 would be 10, so 0.005, right? 20 times 0.005. They were 10 cents a share? Bruh. Yikes. Wow. So now, split adjusted, if we're at 63, split adjusted, this is 31 cents a share. Yikes. Oh, mama. Oh. He's the guy who first pumped open. Okay. Beastwood, hello, good sir. Sorry I'm late. Oh, happy you could join us, my friend. Welcome to the party. Welcome to the party. Microsoft came back down. Not out of the woods yet. It came back a little bit more than I wanted it to. 5-minute never went bullish still. So look for it above, again, like 512. And again, I'm not that red on these contracts. They're okay, and open hasn't changed yet. He's saying you could go 300x or something silly, which I would laugh at, except for open. Well, all right, well, here, let's compare. Open right now is a $5 billion company. 51 cents, assuming 5. It's like 300 million or 300 million down here. Now it's at 5 billion. But that is a 1,300% gain to today's price. At max, that would be for open if you got in at the literal bottom, you got out on the literal top, 2,000%. So comparatively, that's so fucking ridiculous. Sorry. Let's assume you got in the absolute lowest. This is why I hate people sometimes. Hold on, I gotta really zoom out for this one. You got it at $7. Okay. So 3,000% would be $250 if you got in on literally the bottom. Unless you're saying 300% from now, which is even crazier. Let's assume you meant that for 3 days ago when it was at $30 a share. Wait, that's only 30x. No, that's 30x. This gets even more stupid. Hold on. That's only 30x. No, no, no. Hold on. You need $30,000 in gains. Or percentage. Sorry, I mathed wrong. Okay. So, right around here is 30,000. Okay, bro. $22,596 a share. Can I buy $22,000 call contracts right now? Oh, they don't have any options? All right. I hate people. If what you're saying is true, hash it. I hate people. Like the dumbest commentary. Not you, but someone saying this is gonna go up 300%. I will eat. All right, here's the deal with you guys. If this stock, BETR, you can clip this and remind me. If BETR goes to $22,500 a share, I will literally eat a shoe live. So if this stock goes to $22,500, I will eat a shoe live. There's a time expiration on that. It's going to be within a year. I will eat a shoe live on this program. That's how confident I am that this is not going to go 300%. I hate people because that's the kind of stuff that like ropes in people into investing who don't know better. And they're like when I made that first open video, right? There's people in the comments who are like, "Oh, open's going to go to $10 million. You quadruple your money overnight." It's not, guys. Like, it's not. It will go up, right? It could squeeze more. Maybe this thing goes to like, what do I have it charted out to? Hold on. Let's see. I have 1947 as like my top LOI right now. And we'll reassess at that point. But, okay, cool. You might double up on this from here. So 7 to 14 to 21, right? So 200%. We go a little bit above that. But it's not going to go to like $80 a share, whatever ridiculous $90 a share price target people are sharing. Like, you just look at the high and go like, wow, it went $39. Bet it could get back there. Maybe. But probably no. Just probably not. Beastwood says, can we pick the shoe? No, I will pick the shoe because I know someone's going to do some disgusting stuff to that shoe, and I'm not eating a doo-doo shoe. Toby says only a 5 million float. We can pump this. No, Toby. Bad Toby. Strange said, totally going to clip that and pump it on Wall Street Bets. You know, if you clip that and put it on the I bet you if you clip that and you put it on Reddit, it actually would get some traction. If you clip me saying that, people are going to share that around. And I'm going to unintentionally be a meme. The shoe eat guy meme. So far, open's looking pretty good. We're getting around that 750 area. So like I said, right around here, 750 to 760, we're going to want to see some volume pour in and push to the upside. Those contracts right now are trading at 60 cents, so pretty solid so far. That may not seem like a lot, but not too bad. Whatever that is. It's 10%, 11%. Yeah. Well, 11, 12%-ish right now. Oh, crap. Marcel, you caught me. Yeah, I said a put. Okay, no, I said a put. I said a put. I said put. Sorry, I was distracted. Oh, did I not write? Lol. So I put the alert out in our Discord, and I put everything but the stock ticker. Everything but the stock ticker on the puts I sold for open. Stupid. Okay, so this is where we want to see some volume come in. Got about 17% here on those open contracts. Now they kind of consolidated around here. Let's look at our IV. IV has gone up 205. So I want to sell into higher IV. Remember when I bought these, it was around like 195. So you want, when you're trading a stock like open, you have to watch the IV, especially if you're on the buy side. You want IV to go up. If IV starts going down, that you may, regardless of the price action of the stock, well, the price action logically would be going sideways. You want to be very careful because it could still move in your favor. But if you get IV crushed, you're going to lose all your money. So if we get a sharper move on open here, if we just quickly bounce all the way up to, let's say, open, for example, just for simplicity, these contracts at open reached a high in 97. It's possible if we go there quickly, right? So IV expands as we go there, that the contracts should be $1, $1.10, $1.20. They could be worth more just because the IV is expanding as we reverse to the upside. Toby will lick the foot the shoe came from if we succeed in this. Toby says, don't drag me into this. Yeah, that's it. It's done. Done deal. All right, guys, everyone shake hands. We're agreeing. Toby, you can include this in the Wall Street Bets clip. Toby will, in fact, lick the foot that the shoe came from. I'm just imagining, like, this is just a weird thing to think about. I've never thought I'd eat a shoe, though. I can't say I want to. Or that I would. Getting a break over the POC on higher volume here, so you're knowing a little bit of a volume spike here on open. What I'd look for is around 775 to 786 is some level of like a supply. So kind of like bump around here before going a little bit higher. And obviously like VWAP's going to act as a little bit of level of resistance. I'm going to take a few off here for 22%. Nothing crazy, but... Ooh, there we go. Gonna trim again here. Remember what we just talked about with IV? That's 27%. And these are moving. I trimmed a few more for 33 here. Take that IV pop. Next trim will be runners. Like I said, you're in a period right here specifically is where you're going to hit some supply. Actually, let me lead by example. I'll go runners here. Let me fill that out. There we go. Bada bada bing, bada boom. 32%. Cool. Still rocking that Microsoft trade. It's not down. It's down a little bit, but it's nothing too crazy here. And so now in runners, we locked in a nice 30% gain, which is sick. I want to keep that 30%. That's good. Rocking and rolling with that. So now on the runners, what I'm looking for here, again, right here is an area of supply. And keep in mind, actually, let's check the IV. The IV actually went down a little bit. The IV is at 202. But that IV is going to change the evaluation of these contracts very quickly. So even if the price stayed exactly where it is right now, like we're getting some volatility, which is good because we're long. I am long by the open calls on open. But if we just kind of fart around here and go nowhere for the next like 10-15 minutes, these contracts, which are currently 70 cents, will probably trade back down to like 60 cents because that IV has decayed down again. So when you see a big pop, a big move, in terms a wider move in price action, especially on like a meme name on open, anytime you're trading high IV, take those gains. Don't be greedy. Now I can be a little greedy with some runners here because I can afford the runners. But if you can't afford the runners for whatever reason, realize a 30% gain. That's fantastic. Stack a 30% gain every single day. You will be very wealthy. For context, if you stacked, and this is in terms of your portfolio, right? So you'd have to trade a little aggressively to do this every single day. But you stacked about a 10% gain on your portfolio every single day. You double up your money in 5 or 6 trading days, something like that, theoretically, assuming everything's compounded. So when you get a 30% gain, especially on a day trade, lock it in. If you can afford runners, take the runners. If you can't afford runners, just take all the money. Take 30%, dude. You'll make another trade. Do not complain. Take that. Especially when you know, like I'm talking about here, you're in an area of potential supply. We hit a nice reversal like this. Again, my bread and butter. We get in on a low. Even have a little head and shoulder reaction here. But you get in where people are doubtful. Things could be bearish. Hit the reversal. That is how I will and continue to forever trade. So solid trade there on open, and there is more life in this. Like I said, it could get back to 814 today, but again, I will reiterate, especially if you're in a smaller account, this is an area in which it could start to just IV could decay. We could get a short-term rejection here, and these contracts can quickly go from 70 to 60 or 58 very quickly, and you do not want that to happen. So in normal conditions, we're trading a stock that doesn't have higher IV. Maybe I wouldn't have gone to runners so quickly. But if I'm trading a name with higher IV, I want to be even more aggressive, almost treat it like a 0 DTE. When I get a quick move on quick and higher IV, I want to realize my gains as quickly as possible, especially since IV is already decaying. I know you can't see us on my screen because you can't see pop-ups, but it was 205 when I first checked. So I entered around 190 on that little move here. It got up to 205. Now it's at 201. I know that doesn't sound dramatic, but a 5% swing in IV is big. Maybe it's not as big comparatively because this is a 200% IV right now, but those swings are pretty large. So if that IV continues to decay here, you're going to want to be ultra careful. That's all I'm saying. Stop warning you guys now. You have fun, but be responsible because this is an area in which there should be some level of supply. And you're seeing some wicks here. Could come back down, even if it comes down to VWAP here. So not even that far. Those contracts can drop to, like I said, 60 cents very quickly. So that's me warning you as much as I can. Oh, well, it's almost already 11. I know when it's almost time to end the show because my stomach just goes, and it means I'm hungry. So that's when I know the show, it's time to wrap up the show. Or we get very close to needing to wrap up the show. We'll do a little run around again. Oh, look at this. While we're talking about open, look at this, guys. Remember that red line I put on the chart? Look at that rejection. It went a little bit higher, but look at that. Getting trolled. I hate getting trolled. Bastards. You got a little bit, popped it, and reject it right away. That is so unfortunate. Beast dropping the love for the Discord. I will let him know you said hi, my friend. What's Microsoft's trigger? IV again. There's no. I didn't track. I'm not really concerned about the IV on Microsoft. The trigger for Microsoft, right here, 512.76. That's your trigger point, which you can clearly see here. Like I said, this is like the middle because it's more of like a range specifically on Microsoft here. But this is what I'm looking at or treating as a trigger. If we get over 512.76, you're more than likely now you've got the 200 coming down, so you might pit stop the 200. But you're more than likely going to tap this tiny little spot here, 514.20, as like a pit stop. So you'll pit stop the 200, you'll pit stop this 514.20. But if we break over this, and again, if we break over that trigger and the Qs are above this trigger at 601.65 and NVIDIA's North 180, then these contracts go in the money. This goes back to open price, which open price is actually 513.51, so that's actually lower than this price target. So I should say pre-market high. These contracts will go back to pre-market high if that specific scenario occurs. Again, breaking the 512.76 trigger on Microsoft, breaking the 601.65 trigger on the Qs, and being north 180 on NVIDIA. And I'll also remind you, Powell speaking midday, and Trump speaking like all day sporadically. So there's a few things that you got to consider from like a risk standpoint. There might be a little bit of randomness thrown in there, but from a technical basis, if we're over those three things together, because NVIDIA is going to just give that extra confluence that tech is doing okay, as NVIDIA is the big leader right now. And actually, something that we saw with NVIDIA yesterday specifically, look at other semiconductors and look at NVIDIA. When that news came out, a lot of money flew into NVIDIA and came out of those other semiconductors, which makes a lot of sense when you think about it. But that's why you want to watch NVIDIA specifically for sentiment, tech-related sentiment today, because we know a lot of new money went into NVIDIA yesterday. So we want to see if that new money sticks around. So that's important to keep in the back of your head. LV and IV look the same. Oh, is that an L? LV again. Level. Got it. All right, that makes sense. Sorry. It just looks like one straight line. All right, so let's do a quick little roundup, and I'll let you guys be. So first we'll go back to open, because we just talked about Microsoft. So you guys have the plan there with Microsoft. And again, these are not far off from my entry at any means at all. It's just kind of hanging out. I have a 312 entry. It's at 285. You know, manage it if you're worried about it. You could stop it at the low of day if you're really worried about it. But I'm pretty confident, unless Trump or Powell says something that really like makes the market tank, that these are going to go, this will work out nicely. As long as the scenario I outlaid to you guys works out. Going back to open. All right, so actually, let me highlight this in real time. Those contracts right now are at 72 cents, and we've moved higher. And this was my high trim. So the contracts, well, that's the bid now, but the contracts have not appreciated. The IV right now is 199. So the contracts have not appreciated in value as the stock has gone up. So this is a real life example of getting some IV crush. Now, if there was a retracement, again, I will continue to say, if there was a retracement, it comes back down to here, the contracts are going to depreciate even quicker because now the price action is going against you and you have IV crush. Unless the rapid drop where the IV could theoretically expand, but even then the value of the contracts would still move further away from being in the money, which currently they are in the money. And consequently, you'd eat a loss, more than likely. So on the subject of open, I do think it's likely that we retest this 760, 750 area. Like I said, right where it's right now is like a period of liquidity. So we'll see how it acts. Breaking above the 200 MAs, basically you're triggered to go back to open and 814. Closing above 814 does set this up very bullishly for the rest of the week, actually. You'd leave a decent hammer candle on the daily. You've defended the lows. You defended old resistance, which now has become new support, and the gap as well. Yes, we did go lower than it, but we didn't gap fill, right? So there is a strong possibility if we close, again, very specifically, if we close over 814 today, that the next few days here, not that it goes right away by any means, but lean more bullishly in open's favor, where now we've had this harsh move up, we've had people take profits, we've had some bears possibly come in on these last 4 days here, and we find new price discovery around the low 8s before getting another leg up, a la this right here. So very similar to this, where you had a sharp move up, retraced to some degree, which you see here, sharp move up, retraced to some degree. So you're right around here. So it could fluff around here for a few days, like you kind of see right here, before getting that next leg. So that's kind of what I'm looking at here for open, looking for it to sustain around 814 before pushing higher. Now, as it pertains to that day trade, I'm in runners. I didn't put a stop loss yet, but I'll probably stop loss limit break even. And I probably go a full exit at 814. Again, it depends on how quickly we move. It's harder for me to say because, again, the IV will expand, contract, whatever. But I would watch your IV very carefully. I'll remind you, when I got in, IV was at 195. It is now, so when I exited, when I went to runners, IV was 205. IV is now 198. So IV is moving very aggressively. You have to watch this if you're trading a high IV stock. You must watch the IV, especially on weekly contracts. There's nothing wrong. I'm not saying don't trade them, but you do have to understand that risk when you're on the buy side of options and you're buying high IV. For you to be successful, there needs to be higher IV. and the price needs to move in your direction. So you have a double-edged sword there, where if it doesn't move quick enough in your direction, even if it moves in your direction, you could still lose money. So just keep that in the back of your mind. Now, with that being said, breaking above this range, I'll look and see what like the momentum looks like, and I'll probably trim out somewhere in this like gappy area over the 200. And then, like I said, 814, I'll probably just go like very light runners and just kind of see where it goes. I might keep one or two, so I can own some shares at 750 or own more shares theoretically, but nothing too crazy. Going to the market, we are at 666 for the SPY. Nothing too crazy there. It's kind of range bound. It's probably waiting for Powell. The Qs are looking like we might get that reversal actually sooner than later. So as we're on the Ultra Devil's number, so the regular Devil's number is 666, Ultra Devil number is 66666. So while we're trying to break the Ultra Devil's number here on SPY, it looks like the Qs are trying to put in a little bit of a reversal here. Now, you'll notice that NVIDIA is above 180, and if the Qs can substantiate a move higher, we could break this trigger and continue the upside. Obviously, that helps me with the Microsoft position. But what I'd like to look here for a actual confirmation of a break, I'd, in a perfect world, like to break this, tap the 200, actually come back and back test it, then go break the 200 and push back to high a day. So that would look kind of like a zigzag and go. So if you did want to consider calls on the Qs, which again, I would strongly suggest you don't consider, trading the indexes, that would be the opportunity I'd look for, the break and then the back test off of the 200 MA rejection, and push that to the upside with a tight stop. That actually could be a really solid trade if it works out. But again, that's all part of the theory here, assuming NVIDIA could stay over 180. That supports my theory that Microsoft should get some upside here in the near term. All right, we're up to 170. We're up to 77 cents now on those open contracts. I'm going to trim some here, actually, before I get out of here. I'll trim some on the 200 MA tap. That's 43% gain. Bada bing, bada boom. Not too bad. All right, guys, that's going to wrap it up for me. You guys know what we're looking at for open. Microsoft, the whole market for the rest of the day. Keep in mind, middle of the day, we have Powell and Trump and everything, so at least be aware of that. Hopefully you guys enjoyed today's show. Hopefully you learned something, maybe made a little money, right? I'm more than likely going to do a stream on Thursday. I was debating on tomorrow. I don't know, you guys can let me know in the chat. What would you prefer? You guys are the ones that are watching right now. Thursday or tomorrow? Tomorrow, I'm not sure if I can do it. But if more people really want tomorrow, I can see if I can move things around. But it's more than likely going to be Thursday. But if you guys prefer Wednesday, I can see what I can do. But I will do one more stream this week. I'll let you guys, because I know I'm on delay, so we'll see what you guys say. Do one more stream this week. That way I prepare you for the end of the week as we head into next week, which is going to be the end of the quarter. Wait, let me triple check. That's actually end of quarter. Yeah, next Tuesday. So one full week from now. Is end of quarter. So Friday's close could be very interesting, and obviously that Tuesday close, gonna have to watch market on close orders, watch that come through, get a better idea of at least some volatility as we head into literally the end of this month and mid OPEX. I think at this point, like I said, the wet banana theory is that we're gonna slip and slide here for another week, and depending how that turns out, we'll see what happens. All right, guys, that's going to do it for me. Those open contracts are moving again, so if you don't take money or you don't like money, then I have nothing. It sucks to be you. Toby says Thursday is the only one who spoke, so Thursday it is. All right, guys, enjoy the rest of your day. Make smart decisions, make smart trades, and as I always like to say, some say you'll need an edge to trade. Well, I like to look at things from a different angle. That's always what we get right here on the Atomcash angle. Hope you guys enjoyed the rest of your day. Make smart decisions, and I will see you on Thursday at 9:15 a.m. and we'll play the Wet Banana song just because it's a ripper. So enjoy this ripper, guys. I will see you on Thursday.